What's going on, guys? This is your boy Mac the Trader, and welcome back to another video. In this video, I'm going to be showing you how to select your time frames, right? How do you know whether or not to use the H1 time frame, the H4 time frame, the M15? I know we have a lot of new traders who are new to day trading, who are new to investing, and I know you guys may not understand what time frames to use or what you should be looking at on what time frame. No worries, I am here to help. So if you're not a part of the YouTube family, feel free to go ahead and hit that subscribe button, hit that bell notification icon to be updated whenever I upload a new video. Without further ado, let's get into a quick commercial and a quick intro, and then let's hop right into the charts and let's discuss time frames. All right, so I hope you guys enjoyed that quick intro and quick commercial. Now let's go ahead and start talking about what time frames to use depending on what type of trader you are and how you should go about looking at the time frames. So to start out, we have to understand what time frames are meant to be utilized for what types of trading, right? So if you are a swing trader, meaning you like to hold trades for 4 to 6 days, maybe even longer, okay, you're going to be using somewhat of the H4, okay, up to the daily. Okay, now we're going to stop at the daily time frame. Mainly because anything above the daily I start to look at as position style trading. I do utilize top-down analysis, so starting off on the monthly time frame, working our way down. Okay, and if you guys want to be a part of that top-down analysis for a certain pair, feel free to join the Telegram bot. Okay, it's going to be the link in the description. Join that bot because on Sundays, right, I host free webinars and my team will send out a link for you guys to join in on those Sundays so you all can see a top-down analysis of an asset that we're currently looking at trading the following week. Now, those of you all who are part of our trade alerts, all right, we are currently up this past week. I believe we had a 9.67% trade on GBPUSD, which we're going to go over, all called out within the trade alerts. Last week, we hit 19% on GBPUSD. The week before that, we hit 13% on GBPUSD. The week before that, minus 1% on EU, and then plus 5% on AU. So far up this month, we're resting around 42 to 48% return on investment, just depending on how you like to manage your risk and things like that, all while taking advantage of my higher time frame trade ideas to all of you all who are part of the trade alerts. All right, feel free to gain access, feel free to join. I mean, it pays for itself. So if you're looking to swing trade, you're going to be paying attention to the H4 and the daily time frame. If you're going to be looking to intraday trade, you're going to be paying attention to H1 time frame. All right, you can also pay attention to the H2 if you would like, or even the H3. Really going to utilize that H1 time frame for intraday trading. If you are going to be day trading, then you're going to be utilizing the M15 time frame, right? And then of course, if you're going to be, actually, we'll just stop at day trading for now. Now, one thing about my trading, okay, there are two time frames that I always use. Right? I always have a macro time frame where I look for my higher time frame analysis and points of interest or areas of interest. And then I also have my micro time frame looking for my confluence within my macro, right? So you're always wanting to use two time frames. One time frame you're going to use in order to build a framework or a trade idea, a lower time frame micro, you're going to use to actually look for confluence for your entries and things like that. So as we can see here, all right, these are obviously going to be our macro timeframes, right? So you should first go to the macro if you want to swing trade. Go to the H4, the daily, break down the market, see what the market's doing, what should you be anticipating, what's happening with order flow, supply and demand, what's happening with liquidity, structure, buyers, sellers, all of that, right? That's where you're going to find your higher time frame confluence. Once you're ready, or once price actually trades into your higher time frame areas, right, this is where you're going to then go to your micro time frame and you're going to start to look for possible reactions. So on the micro time frame, if you're going to look for micro reactions on the swing time frames, you're going to look for those reactions on the H1 and the M15. All right, M15 for the H4 POI, and then for the daily, you're going to look at the H1 reaction. All right, for intraday, okay, you're going to look at reactions on the M5, and then for day trading, you're going to look for reactions on the M1. So let's just make sure that you all have clear understanding of how we pair these timeframes up before we actually get into the breakdown. So when you're swing trading, you're going to find your higher time frame confluences on the H4 or the daily time frame. Once you find those higher time frame confluences, you're going to wait for price to tap back into those areas. Once you look for price to tap back into those areas, you're going to look for certain confluences on the M15 or the H1 to take your trade, whether that be a buy or a sell position. For the intraday level, okay, you're going to use the macro H1, H2, or H3, and then you're going to look for valid entries and reactions on your M5. For day trading, you're going to look for valid points of interest on the M15, and then you're going to look for those entries and reactions on the M1. So that is essentially how I break down my time frame and how I pair them up. Now let's start to get into the breakdown now that we understand time frames and how to utilize them. All right. So to all the new students who have been in my DMs asking me about this, all right, hopefully this video definitely helps you guys and puts you all on the right side of the market. So let's start to break this down as it relates to the H1 time frame. And remember, guys, this was sent out to all of my trading community students beforehand. Let me go ahead and show you guys that before. Give me 1 second. All right, so this is going to be the before. It was published on August 30th, okay, 23:49, which is going to be 11:49 p.m. Okay, as you guys can see, price was right here within this area, and I told my students that this was an H1 POI. I wanted to see my entry take place on the M5 time frame. Just as you guys can see here, intraday H1, we're going to look for a micro entry on the M5. Okay, and we had 2 points of interest here. So we had 1 point of interest here around 1.16890, and we had a second point of interest here around 1.17339. So we were essentially looking for price to push into the upside, tap into these regions, and then fall over to the downside and target sell side liquidity, which is resting here. All right. All of my students and community traders had this analysis before London session, before New York session, before price actually gave an entry. So if you are part of Mac Trading Academy, if you have access to those, or if you have access to the platform, you all were already aware of this trade beforehand, already getting your charts prepared right along with myself and my team. All right, so now let's head back to the charts and let's discuss what actually took place. So price is right here within this area on the H1 when the alert was sent out, right here. I told you guys that I wanted to see price tap into this region here, and then we would look for a possible entry on the M5 time frame. For those of you that also have access to my trade alerts, I also tell you all what time we are going to be looking for said entry. Okay, so I make it very, very easy and very, very straightforward for you all to hop on your charts, look at the analysis within the academy, and then trade the markets just as myself and my team are doing. All right, so now let's go ahead and break this down to the M5 time frame and let's talk about our entry. What's going on, guys? This is your boy Mac, and I have an announcement for you. For those of you all a part of my trading community, we are currently up about 20% on our last day trade called out to all of my trading community. If you are not a part of my trading community, but you want to be able to produce consistent results and you want to be able to have those payouts funded traders have, then what I want you to do is I want you to join my trading community. I will catch you all on the next one. All right, so now that we're on the M5 time frame, there were actually 2 entry opportunities, but because I told my students don't look for an entry until a certain time, okay, we actually cannot count this first entry, but I'm going to show you guys if you're applying my strategy and if you are utilizing the information yourself, this could have been an easy trade that you could have taken. However, I wanted students to wait for a certain time in order to make sure that price was going to go in our favor, right? So we're going to go over both entry opportunities. However, the one that students were able to take was this one here for around 9.67%. All right, risking around 6 pips, targeting 58 pips. Not bad at all, but we're going to put this trade to the side for now, and let's talk about what actually took place here. So stemming from the previous evening, right, we can see that price was going bullish. Okay, around this area here is when I sent out the alert, as you all saw previously. So around this area here is when the alert was sent out, okay, before London session. I try to wait for us to get to as close as London session as possible so you all can have a fresh analysis on what we're anticipating price to do and that you guys can be on the right side of the market, right? So once price taps into this higher time frame region, okay, we're essentially looking for sellers to come into the market since this is a higher time frame supply point of interest, right? We're just adding our confluences on top of confluences. That's all we're doing. So we can see here we have a sweep of liquidity, all right, running this high here. We then see that price pushes to the downside. We take out this low here, giving us a change of momentum, right? After the sweep of liquidity, which is here, right? After that takes place, price trades back into our liquidity POI, which is going to be this wick right here. Okay, now why is it going to be this wick? All right, we can see that this wick here sweeps liquidity here, and then we mitigate something a little deeper into this previous wick here. okay? We could go down to the M1 time frame, the 15-second time frame, the 30-second time frame, and I promise you, you will see some type of supply right here within the market, okay, that formed before price had this move to the downside and before price had this spike to the upside. Now, that's going to be homework for you guys to do on your own, okay? However, I'm going to do it with my mentorship students. If you would like to be a part of the mentorship program to join in on those weekly webinars, we do 3 webinars every single week, right? Along with live trading, along with one-on-one sessions for you all to be able to ask your questions and receive answers from my team and I, right? So we can see first entry was right here within this area. We're going to go ahead and label this as a short position. We can see that it took place during London's session, which is 2 a.m., right? And then we're going to go ahead and place this right here. Let's see. So we're going to have to risk about 4.5 pips on this trade, simply because of my rules. All right, so we'll place this here for now, and then let's talk about our second trade opportunity. So our second trade opportunity was right here within this area. We can see that after price had mitigated this previous region, we had bears come into the market. We had a nice push to the downside, creating this lower low. Price gave us a small retracement here, right? And we can see that essentially we had supply coming into the market, okay, with these inside bars that we can see back to back, I might add. We then take out this demand here, okay, still in the form of a swing low, all right? So we take this out. We leave a little bit of imbalance here as well, and then price trades right back into the supply that was responsible for flipping our demand here, right? So this was a very, very beautiful entry. Entry was as soon as price taps into this zone, which was right here. All right, now we can see that stop was about 4.5 pips. Now, if you did not round up and you used 4.4 pips, just putting your stop above this high, you were still good to go. But as you guys know, I like to round up half and whole numbers only. So we're going to put this at 4.5, not bad at all. And then we're going to go ahead and extend to our target right here within this area for about 54 pips. Or 58 pips, excuse me. There we go. We're going to round this up to 6 pips here, because I'm pretty sure most of my students use 6 pips on this trade. So you could have used 5.5. If that was too close for comfort, all right, you could have rounded up to 6 pips if you didn't think that 1 pip was enough, just in case price did spike up there, as you guys can see here. So upping this to around 6 pips, just to add a little bit more buffer. I believe this is the stop loss we talked about with my students and things like that. So we'll just leave it here for the YouTube breakdown as well. So we see that this trade here produced about 9.67%. Remember, guys, this target was also given as well, right? This is not something that you guys have to guess. You guys don't have to guess, should I enter here? Should I not enter here? Should I target this area? Should I not target this area? All you have to do is join Mac Trading Academy's platform and gain access to the trade alerts, the trade breakdowns, where all of this information is given to you, right? Teach a man how to fish and he will eat for life. So as we can see here, this trade produced about 15.13% if you took this entry at the apex, okay, the first entry opportunity that was given. However, this was the double confirmation entry here. Not bad at all if you wanted to wait on that extra confluence. With that being said, I'm going to go ahead and wrap this up here, but hopefully this was a great example for you all who have been wondering, how do we utilize our time frames? Now, as you guys can see, if we go back to the lower time frame, let me just add this trade on the higher time frame really quickly. All right, let's go back to the H1. So as you guys can see, the last 2 trades taken on GBPUSD, both called out within the trade alerts. It was a 19.38% trade and a 9.67% trade as well, giving you a total of 29.05% return on investment just utilizing Mac Trading Academy's trade alerts. Do not sleep on those trade alerts, guys. If you all are wanting to increase the amount of money within your account, if you're wanting to add to your monthly income, or if you're just someone who has a funded account and you want to be able to utilize trades day in and day out, take advantage of Mac Trading Academy. If you guys go through all of the content within Mac Trading Academy's trade alerts, you will see we've been profitable for over a year. Over a year. That's absolutely crazy, right? Take advantage. Don't sleep. Let's get it. So with that being said, I'll catch you guys on the next one. Much love and peace out.